So today we have Simona Gandrabur, Head of AI and Innovation Strategy at National Bank of Canada. Simona has been working in the general field of AI for close to 20 years, most notably in areas related to natural language processing, such as automatic speech recognition, natural language understanding, machine translation, and conversational reasoning. Her experience ranges from many years in research and development of smart assistant applications to define strategy of AI-based offerings. And she's currently head of AI strategy within the Wealth Management Division of National Bank of Canada. So I'll let Simona present some of her insights now. Okay.
Hello, everybody. Thank you very much for joining. My talk today will be about how COVID impacted banking, and in particular how it impacted AI-driven applications at the National Bank this past year. I will obviously take you through a few stories and some conclusions, success stories, and key factors for success. To begin with, if we think of banking and if we think of impact on banking and AI, the first thing that pops to mind naturally would be, to think of the market crash, the risk models, model drifts, the distribution of events that the models were trained on drastically changed during the pandemic time because of all the underlying events, cash flow predictions, and so on. But actually, the most important thing that happened last year, and the one thing that I'm most proud of working at National Bank, is that the highlight was the impact of the pandemic on people and how the bank dealt with that, how it adapted its communication channels, how it adapted its approach to advice, how it's adapted its approach to care towards customers and employees. And our part of the story, ours meaning the AI and the data people part of the stories, was to support all this with data. So I'm going to, take you through two stories. Obviously, data helped in a number of ways for a bunch of analytics use cases, whether it was to understand what our customers are worried about, or whether to understand what our employees are worried about, and how their degree of well-being was in terms of engagement, in terms of doing surveys. So data was central to all this. But I wanted to highlight two stories where AI, meaning not just data but machine learning and doing smart predictive modeling to help our decision making and our interaction with our customers, how that helped during the last year. The first stories will be about chatbots, and I'm calling them intelligent because I really want to make a distinction between scripted question asking things and just conversational chatbots, as I'm going to present to you. But everything in AI in banking starts with a business need. It needs to start with a business use case, or else it just won't lift, it just won't work. So what was the business need? Well, during the pandemic, there were some foreseeable effects and some others that were more surprising. So one of the first things that came to mind was that there was a massive reduction of client access to physical branches. We closed branches down, we reduced the hours, the number of customers allowed inside were reduced, and people were reluctant to just walk over to a branch. And another factor that impacted this use case was that the number of direct brokerage accounts open, the demands to open a direct brokerage accounts just explodes up to as much as 300% on certain months as compared to year over year. So with the surplus of time and the surplus of money on their hands, people turned to the financial markets and opened brokerage accounts. In addition to that, there was an explosion of the real estate market and the activity in our credit sections boomed. So all this had a huge impact on our call centers and our email processing, client email processing centers, with activity tripling in many months. Other than hiring up quite quickly, well, what could we do to help that? Well, we deployed a number of activities that were going to relieve call center activity by enabling online self-serve actions. And one of those was intelligent chatbots. So we deployed an FAQ engine and an intelligent chatbot on our bnc.ca and sign up page, where you can, start asking questions. Then the bot comes back with clarifications and confirmations. It is flexible, so you can say things in natural language, whether you can say, I want to deposit money or I want to put some money in my account, questions about deposit, it should be able to handle it. And very importantly, it's learning and it's getting better over time. What this looks like under the hood is basically, as a first step in an intelligent chatbot, you have this natural language understanding, or NLU phase, where what's happening is that you say a sentence or a question in natural language, and then the machine translates that into a semantic formal representation. So what's the deadline for RSP contributions? The NLU engine might translate that into an intention deposit and the product RSP. What I'd like you to note here is that actually here the translation was slightly erroneous in that it didn't capture the detail that I was asking specifically about the deadline. So the answer was partially correct, but incomplete. The next step would be to retrieve the knowledge and the answers related to what question the NLU engine thought it understood. So we access a bunch of knowledge docs, FAQs, procedures, and build our corpus for question answering from those. So then the third step would be the formulation of the response, the confirmation, and the clarifications. This is the dialogue piece. So here, in this case, the chatbot would answer back in saying that I understand you want to discuss online RSP contributions. And because I had specifically asked for deadlines, I had to answer no, that's not what I was looking for. And I wasn't looking for online RSP, I was looking for the deadline. So then it answers back with a fallback of some multiple choice of different topics that it found to be relevant to my question. And I can therefore navigate between these back and forth clarifications and confirmation and finally get to the answer that I'm looking for. What's happening under the hood is that we have these AI models that are trained on Corpora for all the different stages in this pipeline. So for the NLU, for the information retrieval and the dialogue, and we get this data from the same knowledge bases that we've used for training our models to begin with, but we also, and very importantly, collect each and every interaction that these chatbots have, annotate them, and retrain the model such that they can improve over time continuously. Where that landed us? Well, during the COVID crisis, there was a drastic shift in topics that the people were talking about. So we had to be very quick in updating our coverage. So we were updating our models every 72 hours. So in 3 months, since when the COVID hit, we incremented our coverage from 100 to 324 questions. And in over a year, we've successfully answered 500,000 questions. The chatbot has, in the end, a confirmation of whether or not you found the relevant information. So you click yes or no, and that helps us close the feedback loop in terms of whether answers were good, and also monitor how the performance of the models went, whether we have a task completion in the end, how many turns it took to get to the task completion, and so on. And finally, we log all the data and we retrain, and this is what is helping the models to improve their performance over time. So this is the first success story that we had. What was crucial about this story is that we had a clear business case. We had a use case that didn't require any additional, client data, or we didn't have to cross-check different siloed databases. So it was quite a nice circumscribed problem. It answered a specific business need, and we had immense buy-in from the executive to push this forward. So we were able to build this chatbot internally using open source libraries, Rasa libraries, with our AI scientists and engineering who helped us to, put all these models in production, and obviously with the support of the business analysts who validated the material of the questions and the answers thereafter. So, second story is about advice. So we might think of, personalization and at banks trying to sell a personalized product, whether it's credit or whether it's an account or investment opportunities. But one of the most important things that we actually can provide to our customers is not so much a product recommendation, but an advice. And that advice can be, related to live events that are to things that are going on in your life, and so as much as financial advice. And we have a philosophy at the National Bank that our advice should, transcend just the financial realm. We should be able to engage our customers in multiple angles that affect their life, not just our financial products and their financial well-being. So we have multiple initiatives called Advice for Life and Goal-Based Advice. And within that, we said we wanted to use data to better understand the needs of our customers. So let's take a situation. Let's suppose that at a certain time, sometimes before COVID-19, at a random customer-client advisor-client meeting, this customer tells her advisor about her, this first scenario is happening after COVID, so sometimes in the month of May, let's say 2020. So she says that she had been planning all of her last year to celebrate, to do something very special on her 50th birthday, which was in the month of May. And by the way, this is me. I got 50. I turned 50 in the month of May last year. So this is an almost completely true story. So she had planned to do something very special. She had trained very hard. She was finally ready to run the Boston Marathon. She had booked the trip a while back, and now because of COVID-19, everything got canceled. So the advisor's reaction to this story would be very reactive and like reduced to a very, basic, oh, I'm so sorry for you. This is like awful. Now, imagine that this story had transcended sometimes before COVID-19. So sometimes a year before, she might have mentioned to her advisor at a random advisor-client meeting that she was planning to celebrate in a very special way her 50th birthday, the best Boston Marathon. She had trained, she had bought the tickets, and the advisor was very enthusiastic, nice, and took a mental note to himself that he needed to remember this to be, provide some kind of proactive, congratulations when she would actually eventually turn 50. But then 2020 happened, the market crashed, the pandemic, the recession, the great shutdown, everything got crazy, and eventually he forgot her birthday. And when they met in May 2020, well, she told her story about how everything that she had planned actually got canceled, and the only reaction that she got from her advisor was again, rather pitiful story. How could this have then turned better? So imagine that at this random advisor meeting that happened 1 year before her 50th birthday, she tells him the story about the 50th birthday, the marathon, the training, the trip, and he had access to a very neat, simple to use application that within a push button or just a few clicks allowed him to take these notes about what was going on in his client's life. And that this information then got stored in our data repository. If we were able to do that, then when 2020 happens, the application would be able to send notifications to the advisor proactively, telling them that, hey, this client's 50th birthday came up and she had planned a trip which got canceled. And we see that from a, MasterCard transaction history. And she had booked a reservation at the Boston Marathon, which got canceled. And again, we get all this data from our transactional history. And these notifications then translate into, pop-up on this advisor's app, be it the CRM or whatever app we do. And he gets the chance to proactively engage her customer and tell her that, hey, I know your birthday is coming, and she sends her a birthday card, and he actually personalizes in a way that really draws a wow from her. She doesn't send her champagne or scotch, or he sends her an invitation for a virtual marathon to be held at a similar time. But she also sends her offers to help with assistance with a trip refund and for a class action to get those refunds. And he really gets a wow from his client. So taking this one additional step further now, imagine that prior conversation to 2020 actually never happened. So in the previous scenario, we relied on the fact that this client told her advisor what was going on in her life, and then the advisor had a push button, easy way to capture that information and translate it into client actionable data. But imagine that conversation never took place. This is a random event. Could we get that information anyways from our data? And the answer is yes. So there is a wealth of life events that we can detect and predict from our internal bank data, whether you have an upcoming 50th birthday, whether you have booked a trip, whether that trip got canceled, whether those that you've trained for a marathon, well, we can see your spending patterns, gym, training, equipment. We have so much insight into what was going on that all this information we could have actually deducted, even if that prior conversation with the client never took place. So then, when 2020 happens and all these trip cancellations occur, the advisor still has the opportunity to engage proactively with her client and say, well, we can help you with assistant trip refund, we can help you with an action, class action, and by the way, we know it's your birthday and it's an important one, and we're sending you an invitation to a virtual marathon because we think that this is something that you would appreciate. So what does data do in this context? Well, data, it removes the randomness of information trickling between a client and her advisor, and it generates proactively actionable insight into what's important for our customers. How can we put something like this in place? Well, we have worked on a research prototype for proactive live event detection, live event prediction, and advice recommendation that's related to those live events. And the way we can make this happen is by, we have to use our internal banking data, and we have to have the consent of the user to use their data with this specific use case in mind. We can aggregate that with other data sources like the voice of the customer. So If I am calling my call center and I am telling them that I have canceled my trip to Boston and how am I gonna go about getting reimbursed? And by the way, this was the top #1 question, or actually the second most frequent question that people had asked during those first months of COVID. So if I'm calling my call center and giving them this information by doing speech to text and then speech analytics, and or text analytics, if I'm typing this question to the chatbot, our NLU engines are able to extract the intent of that question, relate that to the specific user, and we know what they asked about. So there's a wealth of data sources, and very importantly, there's all this feedback loop data that we get from our specifically designed application that are designed to collect the data that confirm certain predictions or certain life events or certain interests from during the usage, right? So this is the third and probably an incredibly valuable data source. And once we combine these 3 data sources, well, we can do proactive, personalized advice. We could do personalized product offers, such as every marketing, organization tries to do. And we can discover client interests and needs for personalized engagement opportunities that are just beyond the realm of just financial advice. To help put these things in practice, though, and I'm going to conclude on this slide actually, there are a number of things that need to come in place. Well, other than, as I explained in our first use case, the crucial importance of actually addressing a specific business need. Suppose you check that box, but then if you want to make that happen and take such a product from a pilot to a production, well, you have to create a mind shift in everybody you work with at the bank or in the institution you're working in, to start looking at data not just as a static, analytics-oriented data information source, but as a dynamic, actionable data. So to get them to elevate their mind shift from reporting or business intelligence or analytics, and to think in terms of product and product, meaning a way to engage real time with their customer. Okay. The second thing, and this is something that I'm also very adamant about when I engage with my colleagues at the bank, and is about a mind shift in product development. There should be no product that is put out in production without having explicitly designed data collection points within it. So each product, by its usage, is a source of knowledge and insight it's an opportunity to gather this information, and it needs to be explicitly thought out when we design our products. A prerequisite, and sometimes one of the hardest things to actually meet, is that there is typically in a large organization such as banks where we try to do a AI mind shift, and there is a technology debt and a data debt that we need to address in order to make these kind of applications feasible. And finally, and very importantly, is that we need to have all of our client data centered and be linked via master client profile, such that all the typical bank data and all the new products, new and old, that generate new data sources can be linked together to complete the picture of our client. So what I like to tell my colleagues when I interact with them in my role of business data lead or business AI lead, the idea is that I am bridging the gap between the scientists and the business units, and I'm helping elevate the data mindset on the business line, and I'm helping elevate the business acumen on the scientist side. So it's a constant kind of like, educational, if you wish, and opportunity discovery mandate. So what I like to tell them is that it's as much a story about what can data and AI do for us, as it is what we can do for data and AI to make sure that these, conditions for success are met. And this completes my
presentation. All right, thank you very much, Simona, for a very insightful presentation. So I'll just kind of go through some questions that the audience would might be interested in. So in terms of kind of what were the major technology challenges that you kind of faced during this whole kind of process? Let's say in terms of like your natural language processing models, was it like like with this kind of wave of transformers kind of taking over the natural language processing space? Did you kind of capitalize that, or did you was there kind of specific stack that you found was really enabled the products that you were offering to users?
So for the chatbots, we used Rasa, the Rasa dialogue stack with NLU capabilities. We used open source libraries for NLU and in speech and text analytics. Now, the most challenging piece there was for the conversational pieces was to get the training data to train the models. And as it often happens with these kind of, conversational applications, you need to start with the baseline. You need conversational data or you question answer pairs to train your model. But typically to get those question answer pairs, other than browsing through some FAQ page that the business analyst had for you,
right,
to get all the variants that the people speak, you actually need to
did you
app. So it's
actually
like
that's an interesting point.
problem.
So did you find that maybe using human kind of supervised data? So if you have a call center and you have this chat log of the user and the operator, you can at least have you can warm start the model with some kind of initial human data, correct?
Definitely. So that's one of our data sources, of course. So you can warm start your model with this conversational data that you have to annotate, and the annotation effort can't be underestimated, right? It's quite cumbersome to go through all these logs, and then the way to jumpstart your models, warm start your models with some kind of artificially generated data that looks at patterns. And so there are multiple different techniques that you can use. But in the end, you start with something that is not necessarily perfect, and then you can maybe have a
that's very interesting. So, also there might be some slight feedback, but do you track model confidence? If the model's confidence drops below a certain threshold for its answer, then a human operator might be kind of trigger to take over. How do you find the interaction between the client and the how does it usually, how do you kind of monitor and try to intervene in cases where you have kind of some failures?
So there is a confidence level associated with each reply in the chatbots, and this is where sometimes the model might say, the chatbot might say, oh, I'm not sure I can get that for you, or I don't know what you mean, or it would respond with, do you mean this? So does a confirmation, or if it's even lower, then it would present an endless list of possible answers. But we haven't implemented in the short time we've had a seamless handover to a human agent. Although this is something that
there's definitely scaling issues with that. How you can kind of have one human kind of intervene in multiple different chatbots. Sorry, there's a lot of feedback. Okay.
There's lots of feedback, yes, indeed. One other point about this, which is quite interesting maybe to note, is that chatbot errors are weird. So for us humans, we perceive them as weird. Why? So, and they're quite, disturbing. The reason behind this is that there is no true intelligence in those models. They have a surface intelligence where they learn correlation between words for a specific input and an output pair, but without truly understanding the meaning of the sentence, their coloration can sometimes be spurious. So when I asked about the deadline there, it might have picked a deadline for a limit for a credit card limit. So those correlation can sometimes be very surprising
exactly.
for us students. So
This,
chatbots look kind of dumb.
I think there was kind of, yeah, it's usually at this stage, kind of transformer models are still looking at kind of correlations in the data rather than truly kind of some latent understanding of the text. So I guess in terms of kind of the more advising side, like how do you think COVID has kind of impacted assessment for like risk and lending, let's say like in the mortgage market or kind of maybe the commercial real estate market? Like how do you adapt your models to kind of for these kind of scenarios?
So we were expecting some kind of a prudent period during the pandemic and the market crash, and everybody was kind of surprised by the opposite phenomenon. There was a huge increase in,
Right.
in the real estate market. Our models, so at the beginning of the COVID section, we had like churn models, and our modeler were saying, well, we are having a model drift issue, right? The features that the models were based on, who might have looked at spending patterns or at behavioral patterns, whether you use your card on the weekend or what. So well, those patterns changed. So what happened is that during the very volatile months, we always had human in the loop to come mitigate. So no credit decision was done, or no churn prediction or action is taken based on these models without human actually intervening and being,
right. So I guess from
aware
kind
of the situation,
systematic point of view, would you say that to kind of account for model drift, so you're trying to kind of respond to world events with your models, but there's kind of significant drift in your data, so there's kind of a latency period between where you can update your models to kind of this new data set or kind of, new incoming data. Like how do you think you can kind of shrink that down? Let's say if you you have a certain number of human interventions, but you're kind of continuously retraining your model to be able to get it back into production. I guess what strategies did you try to deploy
that? Well, the best strategy where if you were able to render your model robust to these kind of environmental changes or massive, societal changes, such that if you design your model to look at to compare certain individual spikes with averages of what's going on in the market in general, then your model may become more robust to these kind of spikes in models in data distribution. That's one. The second is to have these constant monitoring, where you monitor model performance on your input on a very short window, and you try to raise a flag whenever your model performance drifts below a certain threshold. If you then automatically train on your recent data, then however there's always this there's this risk or this danger of strongly deviating your model, biasing your models towards the recent data, and your model can become quite unstable. So there's quite a lot of correcting involved into monitor model drifts and model performances. And in terms of extreme volatility, such as we have observed last year.
That's very interesting. I might have one additional question
during this entire process
on that, but I guess in terms of kind of security, so you have a lot of metadata, and you're trying to aggregate, let's say, transaction history with maybe kind of client advisor or different kind of histories. You're trying to aggregate this, and in terms of kind of like the security aspect of this, how do you let's say Facebook, lots of companies that aggregate data have security breaches. This is kind of a matter of kind of part of like the business. So so how do you how do you handle kind of security and anonymization or privacy kind of protection? Is that something that's kind of built into the algorithms themselves or the data sets, or like how do you trade off kind of personalization and kind of these other security kind of concerns? Oh,
It's a great subject. I could go on for an hour. It's obviously top of mind. So the moment we deal with this massive amount of data, which is very personal data, we have to have the utmost, preoccupation around securing it, making it non-personally identifiable, putting on, security and governance rules around how this is to be used, and how far we actually want to go with this personalization, whether or not it's legal and whether it's not it's protected. How sensitive would it be like for a client to all of a sudden receive a birthday card? I guess they wouldn't be so surprised. But if they were to receive a birthday card and a note saying, "Oh, I'm so sorry, your trip to Boston was canceled," would they be surprised in a positive or in a negative way? And sometimes that question is very personal. So we have to be incredibly, mindful of the creepiness factor, we call it. So what we've done is we have, first of all of our AI models run in a secure data hub where we are running with, it's extremely well protected, even better so than legacy systems, I would say, that are still active. And we run with anonymized data, so we never had, or we don't have access to names, addresses. We have the IDs, the credit card numbers, account numbers are anonymized, are masked. We have, so they're anonymized, they're not masked because we still need to be able to identify them. And then we unlock them in the live application that the advisor is using, right? So the advisor is allowed to see the name of the client, but we don't want all this data to be visible for all of our scientists in the background in the data space. We secure, different levels. We have different levels of security, and we have an entire team dedicated to, a task force dedicated to looking at bias, ethical, and socially acceptability.
There's a lot of kind of complexity
all of our data
unpack there for sure. I guess in terms of the metadata aspect, do you find that if in kind of certain interactions when using kind of these deep learning models versus kind of assisted with metadata, a lot of times metadata can be more predictive than the text. Let's say like if someone's transaction history shows I don't know, purchasing a baby products or something like that, you can tell maybe that kind of informs you about intent or about their interests, let's say in terms of financial planning or different things, where that wouldn't be revealed and they wouldn't explicitly say it in kind of their interactions, maybe if for a model to necessarily pick up. So how do you kind of balance metadata versus or where does metadata kind of fail that these kind of deep models maybe can really kind of flourish, I guess, and vice versa?
Yeah, so first of all, in these, one thing that needs to be very clear is this kind of metadata needs to be, made available via explicit consent. I mean, we have to have the ability to prove value and to gain the trust of our customers. So it's not by accident, or it was not just a fluke that the example that I showed you was in a client advisor relationship. So in these kind of relationship, when you have a dedicated advisor who is aware of all your financial situation and gives you advice on a regular basis, knows your family history and everything, and gives you advice on, you need to on things such that can be very delicate around. You have to write your will, or you have to prepare for a divorce, or so you develop a relationship of trust. And in these kind of relationship, when the model sent insight about your life to your financial advisor, who is your trusted advisor for a long time, it works. But we have to be extremely careful And we are extremely careful to not use these kind of insights blindly, and we wouldn't. Nobody wants to be the next
Certainly. I guess I won't take up too much more time. Maybe more questions if you want. So in terms of what do you find for preferences between generations of users? So let's say maybe older kind of baby boomer types would prefer human talking to a human. They feel as more valued as a customer if they're they're kind of speaking face to face, because now like someone's paying attention to them rather than a bot. Whereas maybe with more millennial types, younger generations, they actually want to avoid that human interaction. They don't want to. They're paying not to talk to someone, right? So how do you kind of maybe track preferences of kind of users to kind of specific like levels of automation?
Very interesting question. So we do a lot of client segmentations where you try to detect behavioral patterns or preferences in our customer base based on a number of variables, including their age and a bunch of other variables, social demographics, education, field of interest, whatever. And it's obviously a generation. There is obviously a generational pattern into using digital versus human interaction modes. One obvious, a clash we had observed is how adamant millennials and younger generations are about about not having to fill in their personal information and telling us, well, just go and grab it. You have it, all this information, just fill it in, you know it. Whereas, so they are aware that we have these data sources that we could fill in, I don't know, salary information or income information or a bunch of other, their birthday and so on. We could pre-fill a bunch of data fields and alleviate a number of processes by using this data, whereas other people in my generation and even older are more reluctant for their data to be, pre-filled and
that's
selected from our
I guess
data
you kind of see a trend with that, with Apple kind of allowing kind of opt-in for data sharing and data tracking across apps. So it's kind of like a sliding scale in terms of preference for how much data you want to share and how much personalization you'll get. Very interesting.
Yeah. And then you can turn these, however, these personalization things into self-serve and have them as an opt-in basis. So you might want to have an opt-in into a service where it says, do you want us to mine your data and give you advices about this? And you can think of this in terms of banking advice or financial advice or life advice, but just think of, I don't know, travel apps. So you can opt in to have those apps follow each and every step you're going and telling you that just next street in the block from here is this interesting landmark that you would be interested in seeing. And if we opt in like this, it's perfectly fine for us to get these notifications. But imagine that you didn't opt into such a service and you just get out of a restaurant and you have this notification that pops up and says, oh, you've just been to this restaurant. How do you want to rate it? And I might or might not be, willing to do this.
There's kind of like a creepiness factor of being surveilled and being tracked, that kind of thing. Everyone has kind of different levels of comforts, for sure. I guess okay. That's I have lots more questions, but I'm sure you love to kind of get going. But we've really appreciated your presentation. I learned a lot personally. I think the audience also learned a lot. Thank you very much. For your presentation.
It was my pleasure. Thank you.